Welcome back to the channel, everyone. Today, Citadel have been exposed by an investment portfolio manager. He also reckons he's cracked the code as to what happened to the AMC failed to delivers, because obviously the stock was removed from the NYSE threshold securities list. Trust me guys, you do not want to miss this video, so stay tuned and let's make some money. But guys, before I dive into the video, I just want to give a massive shout out to the 1,300 of you that have currently dinged that notification bell, because you guys are always the first to watch a new video as soon as it's released. So guys, be sure to drop a like down below, subscribe to the channel and ding that notification bell if you haven't already, so that you don't miss another video just like this one. And now I want to dive straight in with the key information. So, short comment on AMC. Shorts managed to get AMC off the NYSE threshold list last Friday. Not clear exactly how this was done, but it looks like exposure converted from fails to deliver to outright naked shorts and then packaged them into the IWM ETF. A little bit later I'm going to go through that IWM ETF and hypothesize how they managed to do that. I'm really not going to waste more brain power on this. Citadel is a market maker, and between them and their friend Virtue control 80% of retail orders, because obviously they route most of the trades. They can more or less dictate price on slow volume days. Allegations of buy orders being delayed as much as 35 days through Citadel's data flow. How likely is that? Hard to verify, bearing an audit. But it is true that dark pools trading accounted for over 65% of volume for the last 5 trading days and over 50% the last month. Meanwhile, retail orders continue to be overwhelmingly buy orientated. The only selling is coming from shorts using the dark pools to mute buying pressure. The short ladder attacks from last week seem to have shifted to a numb, inducing slow drip lower. Again, I'm also going to go through that retail orders being overwhelmingly buy orientated a little bit later. The degree of overt manipulation is mind-blowing. I am told Citadel employs a team of psychology PhDs to design price movements designed to drive retail interest away. The media attacks are clearly not working, so the recent price campaign has escalated, driving it from $59 to $39 last week, a brief surge back to $49, and today's slow drip from $46.50 to $42.50 at the close. I really think Citadel needs to fire their psychology experts. Most retail is holding and bought large amounts in March. Many likely did sell a small amount in June, like I did, to cover their initial investment. For example, I was long at $9.60 and sold at $53.40, enough to cover my buy-in and show a decent realised gain. My remaining position is a free rider. The price could go down to $12 and many holders would still be in the money. There were 3.2 million retail holders in March. There's likely 5 million now. There's been no dilution, so how are these new buyers finding shares without the price rising considerably? Similarly to that, how is this IWM ETF able to buy millions and millions of shares to include it in the Russel 2000 without causing a massive AMC price spike? The longer Citadel delays this, the more the final bill will grow. The DTCC has put most of their amendments into effect, so one wonders just how much free rein the SEC will give Citadel and the 22 other shorts before strongly worded suggestions become more forcibly made directions. I thought in March the situation was a danger to financial stability. At this point I give up worrying about it, as it appears officials in Washington have no clue the damage being done. If nothing else, the failure of officials to rein in Citadel all the while the stock is under a huge media spotlight will undermine confidence in the fairness of the markets for retail participants, which in turn will reduce retail activity and hurt longer-term profitability for Citadel. So stop with the games and get on with popping the cyst. So let's start by talking about how the failed to delivers were converted into naked shorts and then packaged into the IWM ETF. Well, a fail to deliver in the short sense is just not being able to complete a trade because you couldn't find the shares to short. A naked short is the illegal practice of selling short shares that have not been affirmatively determined to exist. Ordinarily, traders must borrow a stock or determine that it can be borrowed before they sell it short. So naked shorting refers to short pressure on a stock that may be larger than the tradable shares in the market. So therefore, a naked short is just a fail to deliver that's escalated from not only not being able to locate the shares, but basically having determined that they don't even exist and that they're shorting synthetic shares or just shorting nothing effectively. Therefore, I think that the owners of these naked shorts or the owners of these fail to delivers reached an agreement with the IWM ETF in order to use their shares to locate their fail to delivers, as in they've now basically decided to short the IWM ETF. If we have a look at this IWM ETF, we can see that the estimated short interest has been increasing since Friday the 25th of June, coincidentally when AMC was added to that threshold securities list. The short interest increased from 120.9 million all the way to 151 million. Yes, we did see this big drop down all of a sudden from 138 million down to 117 million, but I think that's just due to Ortex updating their data, as the most recent actual short interest has now been released, the exchange reported short interest. Again, to prove that, if we look at the AMC short interest, it fell massively, supposedly from 96 million all the way down to 78 million, but again, I think that's only because the exchange reported short interest has now been updated. If we go to Fidelity for AMC, the number of buy orders is almost double the number of sell orders on a daily basis, and therefore the sentiment is largely very bullish and very much buying orientated for AMC. I also think it's incredible how Citadel employ a team of PhD level psychology experts just to mess with us and mess around and play around with the AMC price. I was also wondering how the IWM ETF managed to get their hands on 9 million shares of AMC, considering he's surprised that new buyers are still finding shares without the price rising considerably. How did the IWM ETF buy 9 million shares without sending AMC to the moon? So this IWM ETF that holds the AMC is owned by iShares, and BlackRock is the company that owns iShares. So maybe BlackRock has just lent its shares into the ETF, or just moved its shares from its personal holdings or from the company holdings into the ETF. I guess we'll find out when BlackRock report their next quarterly filings to see what's happened to their holdings of AMC stock, whether it's gone down or stayed fairly flat. Personally, I hope that the DTCC and the SEC start putting their foot down on these funds that are engaging in the practice of naked shorting and purposely failing to deliver trades. Guys, if you haven't already, consider joining the Patreon, linked in the description below, to become part of the team and to discuss news updates and DD on AMC before I even make a video. And if you want to pick up some shares in AMC, but you haven't even yet signed up to a trading platform yet, be sure to check out the links down in the description below to Webull if you're in the US, and Free Trade if you're in the UK, to get some free shares with very low minimum deposits. And as always guys, if you enjoyed this video, be sure to check out some of my others. Alternatively, subscribe to the channel and ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers!